Anna Snider, can I make money and a social impact when I invest?
Absolutely. We just launched research actually that talks about this exact point, that you can invest using environmental, social, and governance factors alongside traditional financial analysis, and these strategies actually perform like the market performs or better when you're talking in a risk-adjusted format. And we think that you absolutely can achieve both your social and environmental goals and your financial goals.
Now there's positive and negative screening. What's the best way to do it? What do you do it over at Merrill Lynch?
So there's really no best way. A lot of it depends on the client that we're talking to. But how the industry has evolved is from negative screening to including positive screening. Negative screening, traditionally, you had a lot of people taking out firearms and tobacco and alcohol and other sectors that, for instance, for religious reasons or other values-based reasons, they wanted to remove from the portfolio. In the last 5 to 10 years, what's taken place is that people start to look at the best practices that companies have along environmental, social, and governance and start including that in their investment selection process. So think about how companies use water or waste or energy and what the bottom line impact is of that, and that's sort of environmental factors. Think about looking at diversity, look at supply chain, at human capital practices along social guidelines, right, and how the firm acts in their community. And think about governance, right, all of the frauds and accounting scandals and actions by the SEC. All of these, when you take a look at them, and we call this positive screening, we think it just enhances, right? It's a way to make your investment analysis more holistic, right? In addition to traditional financial and balance sheet analysis.
And do you push by voting your shares or push management during a stockholders meeting to move in a certain way? So how much of an impact do you try and make through pushing management?
So we offer our clients, we as a firm we don't vote proxies, but we have a service that we have clients who want to do that, we make it available to them. And we also have a lot of fund managers, so mutual funds and separately managed accounts where the manager will vote the proxies on behalf of the shareholders.
Now ESG investing has traditionally really been for institutions. It's been very much for family offices and the like. What about individual investors? Can they find it in enough mutual funds and through the brokerage system?
Yes, so the number of mutual funds that do this, and I think do it really well, is growing. So we have a lot of funds that are in development right now and are gaining traction in our system that are investing in public equities and public fixed income. A lot of the family offices and foundations that you mentioned also have been pioneers in the private equity and the private debt space as it relates to impact investments, and we are starting to see those types of offerings also come into the retail space slowly but surely. So the way that we are looking at this is across all asset classes, public and private, equity and debt, and we want to be able to offer all of our clients, no matter what your account size, if you come into Merrill Lynch and you want to reflect environmental, social, or governance issues in your portfolio, you can. So that's what we're building at Merrill Lynch.
All right, well thanks a lot, Anna.
Thank you.
And thank you for watching The Street.